Namaskar. Welcome to yet another episode on Beyond Headlines with Apurva and me. The markets seem to have factored in a Modi victory. Even today, the stock market indices were up by 330 points. A survey of 21 global managers, fund managers, and strategists says that all of them expect Mr. Modi to be back. In fact, some of them think that the Modi government has been one of the best in the world in recent years, and obviously they would pitch for him to be back. The euphoria, the expectation and confidence that he would be back is already factored into the prices in the market, and there seems to be a bull run irrespective of where the indices go and which sectors go up or not. There is no movement of the indices both ways, as we call it. It's only heading upwards. The entire situation of the market, if you ask us, seems to be only pitching for Mr. Modi coming back. What is also helping it is the fact that interest rates have come down, and international and domestic investors believe that irrespective of whichever is the party in power, the direction of the reforms will continue in India as it does. It may not be as international investors think about Mr. Modi, who they think that he has taken bold reforms during his tenure. Perhaps they are referring to reforms like GST, IBC, and of those sort. But despite that, investors generally believe that the direction of reforms in India would continue. That is one side of the coin. The other side of the coin could be, what if Mr. Modi doesn't come back? It also could be, what if he comes back supported by a fragmented coalition who demand their political pound of flesh from him? Will the government be able to then perform the way the investors community expects him to perform? The other question that remains is, if he doesn't come back, will it be a fragmented coalition? Will it be a coalition which is so weak that it might just be doddering every day to survive? That part of the coin or that side of the story has not been factored in at the moment, which is very evident from the bull rally that we see and prices going up every day. Apurva, your domain, stock market.
Yes.
Question, what if Mr. Modi comes back? With this kind of a bull run going on, will there be a further bull run?
So immediate reaction the moment he comes back to power would continue to be good for some more time, because investors in general would want a certain degree of certainty. In absence of him, who will come to power, what kind of coalition will be formed, and what kind of new policies will come in remains anybody's guess. So when you have a clarity, there would always be some premium for clarity.
So is the premium at the moment for continuity?
Yes, the premium is for continuity. That is for sure.
Is the premium that is factored in at the moment in tandem with, if you look at the economic situation, for example, oil price hike is a matter of worry.
Yes.
It impacts India directly.
Yeah.
Corporate profits have still been very uncertain.
True.
Even though interest rates have come down and they are expecting that profits will improve. So is the premium on account of continuity on the much higher side?
So premium is there, that's for sure. Relative to the kind of news that we have on oil front, difficult to guess in short term. See, what has happened is that the oil price movement right from the very start of this calendar year has been one directional only.
Yes.
And we've, even in our earlier communication, we've said that, anything which goes beyond 70 becomes a little bit of a worry for India for sure. I think at this point of time, oil has been a worry undoubtedly. At the same time, corporate earnings have really not lived up to the expectations that were built in.
Yes.
So that is a fact. Now, whether whichever government comes in, we'll have to face with these two realities any which case.
So facing realities reminds me, once, let's say, Mr. Modi's government comes to power, when will reality dawn on the investor community also that continuity of political euphoria cannot give a surge to stock prices all the time? So when will they start ebbing and realizing, oh, there should be some connect with the ground reality?
So, Akhilesh, if you look at the historic data, election results 3 months prior and 3 months after is always a period of this kind of rebalancing. Generally, it happens that after the election results, if it's a knee-jerk reaction, you can have swings of any kind. But a classic example is 2004, when nobody was expecting NDA to lose. And when that kind of results came out, we had a huge knee-jerk reaction. The markets were really bad for some time. But actually speaking, those 5 years were one of the best for equity markets.
Yes.
So markets will factor in everything very quickly thereafter. Today, everybody is focusing around election and election outcome. So answering your query, if the hard realities of oil prices continue in the same fashion, and if we have corporate earnings remaining the same kind of sluggish as we've seen for quite some time, then possibly the only other trigger which could take the market up could be sustained rate cuts kind of scenario that we, if at all we see. But then again, you also have to balance your inflation factor. So rate cuts are not easy. It's not in government hand completely.
And with oil price rise coming up,
Absolutely,
inflation
it becomes
starts
difficult.
becoming a difficult issue.
So in such scenario, markets may react negatively immediately post results or sometime after the results. That cannot be ruled out.
The question that I have for you on the market mood is, at the moment, okay, there seems to be a pricing which is high.
Yes.
Down the line, as you say, there might be a correction. But why is there no sense of nervousness in the market at all whatsoever? It only seems to be unidirectional. If you look at earlier elections, there used to be a two-ways movement. At the moment, just a one-way movement.
There could be one political reason as well, that people want continuity, or at least they want some degree of stability where the fear remains that if there is a coalition, what will happen? Now, there is some interesting statistics on that as well. We've had, the last 4 coalition governments that we have had is a time when actually GDP growth was much better than a single party government scenario.
Right.
Right. So we've had this kind of stuff. The markets have not really done bad under coalition in that sense. So whether politically who comes in power or not is one part of it, but the corporate earnings and how corporates actually deliver the numbers, I think that is something which eventually is going to take over everything else.
The question on that, on the other side of the coin, Apurva, then is, what if he doesn't come to power? Or what if you have a very patchy coalition, or a coalition which as a voter, you regret that you got them to power? In that case, all the pricing and premium at the moment, how much of it would really collapse, and would there be a irrational collapse?
I would call it a rational collapse in that case. Why not? So there would be a collapse for sure.
Would there be an extreme knee-jerk reaction?
It can happen if those kind of scenarios do emerge. But again, it all depends upon what the time frame the investor is looking at. And I think I need to give a lot of credit to the investors now. They generally don't tend to look up for a very, very short term. So there could be trades which can happen. But the investors will have more conviction post the fall that the markets are not going to die out. The markets will still continue to do well. The corporate earnings will start becoming, at least looking very attractive. So I think given that scenario, I don't think that over a long period or even a medium term, the market will continue to remain sluggish. Yes, there could be huge knee-jerk reaction, temporary panic for sure on the streets, but nothing too much otherwise.
So that takes me to the foreign portfolio investors.
Yes.
They have been surging and coming in volumes, in good volumes throughout this year.
Absolutely.
And as we see, it continues.
Yes.
When does the FPI, suppose it's disappointed with the results, suppose the foreign investor expected a Modi victory and it did not happen, do they react so immediately that they vanish from the market?
So, Achilles, there are 2 types of investors here. One who come with a relatively short-term trading opportunities and look at India as an opportunity because of politics and
they might desert.
They might desert. The longer one, and of late there's a lot of sovereign money or pension fund money that has come in. Those kind of money will not fly out immediately. So, I mean, they also can take calls. There could be strategic balancing that will happen. So it may so happen that FIIs may not be great participants in the market in such scenarios. But would there be a flight of capital out in a big way? Possibly no. That might not happen.
So in that case, I have a related question, which is, in case there is a Modi victory, would you be looking at some sectors which might benefit the most from it, in the sense there will be a further very big rally in those sectors, or will there be a balanced rally throughout?
No, there could be sectoral balancing which will happen. But, as an investor, I would still await some degree of indications from the government in terms of how they would pan out for the next 5 years of the new government. Even if it's a continued government, I would still want to see what kind of changes, because they would be learning out of a massive election like this. Some of the areas where the policies might not have worked might have worked very well
But
in
would
some
the
cases.
investor have patience for the government's learning phase?
Learning is a continuous process. How quickly the indications come from government is going to give me an indication as an investor as to how should I behave. Typically speaking, if we look at consumer stocks, if we look at banking, these are the kind of ones which will have an immediate positivity if you have a government with a good majority, good continuance. Those things may continue as it is. Other sectoral balancing, I would wait for cues from the government in some form.
On the other hand, would you be expecting some sectors which would lose the most because of a Modi defeat and whose collapse will be the more than what it is expected on the market?
So the exact reverse could happen wherever we are seeing the sectors which could benefit out of his continuance would exactly work the reverse in terms of a collapse of this kind of government. But the fact is, at that time, if we are going to see a market fall, or if the perception of the investor community is that now with the new government or new coalition government, we don't know. If they come to power and then what's going to happen, I have uncertainty. I might take a call in terms of staying away from market for some time. That time it could be across the board, any sector whatsoever I may want to stay out. Traders may not necessarily pick and choose sectors. Strategic investors will look at sectors and make sectoral balances. So if there is a fall, the fall could be all round. If there is a rise, it could be selective rise among some sectors and other sectors could follow. So that I think is an area of difference.
So there's all this sectoral balancing, euphoria petering out, reality dawning, and you're saying give it 3 months.
Yes, I believe.
And by then probably you start realizing what the times are.
Yes.
But suppose you have a situation where that 3-month period gets extended because of uncertainty. Then we are talking about the markets really getting in almost a bearish phase.
So if you, in those scenarios, and if you have oil continuing the rally in the same fashion, corporate earnings not living up to the expectations, RBI left with no choice, you can't cut rates thereafter, then of course this could lead to a much more longer period of your patience.
So I have a question to you, Apurva. How are you at the moment comparing the state of the Indian markets or the pricing with competing other international markets that compete with India? How is the comparison?
So India has always had a premium in terms of as a market. So given that,
and what is the reason for that?
There's a general belief that India is a fast-growing economy, and it's not general belief. I mean, our GDP numbers have actually showed it as well. Huge consumer base, nice demographics of India. So all these factors put together, India has always had this kind of premium.
Okay.
And I think that premium, to a certain extent, is justified as well. Yes, when you have oil and the related factors that comes in, and oil I have always maintained is a very, very big factor from an economic standpoint, then the dynamics could change.
So tell me, are the dynamics different in this scenario? Or in other words, does a retail investor think differently from an institutional investor? Or is it the same situation that depends on whether he was for the long run or for the short run?
So retail investors get into panic relatively quickly.
Okay.
Established institutional players show a lot more maturity in that sense.
Okay.
Unless somebody has a hedge fund mindset, and of late you have all mix of investors put together. But the fact that there are no other avenues for someone to invest in so very easily, equity will continue to have the highest allocation amongst the newer money that comes in. To that extent, I think we can pass on this kind of phase very easily. Is a belief, unless there are some facts which emerge to be different.
So in the post-election rally, if there is one,
yes,
would you differentiate between the mid-cap stocks and the big ones?
In such scenario, mid-caps may do well because mid-cap had a very bad period for the last year and a half.
Right.
So it would be a catch-up that could happen at that time. Of late, if we see, the large caps have done quite well in the recent times, and even when the FII money is coming in, it is chasing some of the so broader indices have done better, which is obvious. But in such kind of a scenario where the government is able to win over with good majority, we might see a good rally within the small and mid-cap space thereafter.
I have a question to you, Apurva. If you look at the FDI inflows, they have receded in recent times.
Yes.
Maybe uncertainty has caught on for the moment.
Absolutely.
Or it could be a temporary phase because in the last 4 years, they were going up almost year after year.
Agreed.
But while the FDI has come down, the FPI has shot up, the foreign portfolio.
Yes.
How do you reconcile these two?
So I think we should look at, more on a rolling basis in terms of how the investments come in. I don't think the rolling numbers are looking that bad.
Okay.
There could be 1 year which could be bad, which is what has happened in case of FDI investments. But if I look at 5-year rolling basis, it's a much more evened out structure. On that front, I'm seeing that the FPI flows have actually done better. And FDI is by and large moving on that rolling basis only. So I'm not too worried with this kind of divergence between the two.
And how do you reconcile the fact that interest rates in India have gone down?
Yes.
In the US, they remain bullish.
Yes.
And yet FPI has come into India.
And on, it looks like a bolder statement, but we are still in a scenario where we would have more rate cuts.
Oh, yes.
Yes.
Oh, yes.
So there is still that kind of a possibility.
Despite that, would the FPI come in? Or are you trying to say that instead of getting into competitive interest rate situations,
Yes.
the FPI is getting impressed by the fact that if interest rate cuts happen,
Yes.
corporate profits will look up?
Yes, that's exactly the reason why there is that degree of comfort for investors in general. That if this happens, we have been waiting for corporate earnings to grow all this while. Here now seems to be a possibility that would really happen. So the prolonged period of the expectations of corporate earnings to grow might actually turn out to be a reality in the next 2 quarters.
Tell
And
me,
that will not
Apurva, this particular issue of, interest competitiveness not being an issue, how long would that last? If tomorrow Donald Trump increases the interest rates sharply, would we see an outflow of FPI?
Yes, so there would be rebalancing which will happen for sure, undoubtedly.
I have one question to you. The present situation that is happening of euphoria, a rally happening,
Yes.
Retail investors might go in one direction, the foreign investors might go in another.
Yes.
I think FPI to me it's showing a little of an unusual sign.
Agreed.
All right, that's one part of the story. The other part of the story that we are seized of, which I'm talking very political,
Yes.
that in the present situation, the criticism of the Modi government that comes is demonetization was a blunder, GST was a hurried, measure that you took. It could have been done with a more balanced thing. IBC has not really been such a success as would want to because NPAs remain unresolved
Yes.
largely. How do these perceptions impact, investors or the foreign investors that you would, be guiding in Finolutions, your consulting firm?
So, Akhilesh, what happens is the investors in general they don't look at the history as much. There is learning from the history which is obvious. We look a little more futuristic in terms of saying that whatever was to happen in terms of GST learnings have come through.
Okay.
So possibly the outlook now going forward for the next 3 to 5 years on GST front is not looking so bad.
Right.
Demonetization
Is history.
is again history. I doubt whether demonetization version 2 is likely now.
Right.
Right. So I'm not too worried again on that front. So if you look at, in general, the equity investor community will invest with that degree of bullishness for sure. So we will look more from futuristic point of view. And those two, the biggest of things, I think they are a matter of past. Actually, GST is now seen in a positive fashion by saying that now at least we have a more predictable
Oh, yes.
income coming through.
Oh,
so
yes.
I can actually take some call basis those numbers. And with demonetization too not happening, I am quite neutral to that aspect now.
Right. Right. So here we are discussing whether there will be a Modi victory and how would the market react to it. Will there be a bigger rally? And if there is no Modi victory, will there be a slump which would really render people penniless to that extent in terms of an extreme reaction to a defeat of the Modi government? These are all parameters that only time will tell. Of course, as Apurva says, it would be 3 months post-election results when reality will dawn in. But at the moment, the premium in the market is for a strong government coming. If there is a discount in the market, if there is a slump, it will be because a weak government coming in. So thumbs up for a strong government, thumbs down for a weak government. But till then, keep watching for the cues of who comes to power, and that would determine the rally or the slump. This is Apurva and me signing off till we come back again. Namaskar.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.